Hello there, traders. Hello there. Welcome to this TOGS Trading Podcast bonus session, ladies and gentlemen. We are the gift that keeps on giving. Anyway, you can draw your own conclusions about that. Listen, what we're going to talk about today is that we want to do a little extra bonus session on kind of one of the setups that both Ian and I use, if in different ways and to different time frames and in different instruments, but that is all about trading double tops and double bottoms. Okay, so it's a little bonus session. Yes, listen, I'm sure you can listen to this on audio. But it's probably more suitable, all right, to watch this on the TOGS Trading Podcast YouTube channel, all right, because we've got quite a few slides to go through to sort of just show with you, and it probably isn't it's probably not much of a radio gag, ladies and gentlemen. People want to when we're talking about charts, but as always, all right, I'm joined for our session today by Big Ian in Dublin. Looking good, Billy Ray. How are you doing?
Thank you very much. I'm all prepared to look like a middle-aged man combating technology because I haven't used this particular thing before. So you were just explaining to me how to move the charts back and over and scroll up and down. So we'll see. We'll get on.
There we go. Yeah. All right. Yeah. We'll make our apologies now for any kind of tech faffs. All right. I'll take what I can out in the editing and stuff. But bear with us. All right. You're not here for you're not here for slick production qualities, ladies and gentlemen. You're here to learn something about trading. That's the name of the game. As always, okay, because we're going to be talking specifically about charts, particular trades, okay, it's just a very, it's a very simple risk disclaimer, okay, just, remember that you are always responsible for your own trading decisions. Basically, always manage risk and don't be an idiot, and that'll help you massively in your trading journey anyway, not just from this not just from this session. And if you are very new to the TOGS Trading Podcast, okay, so we're coming towards the end of season 3 as we're doing this in sort of October 25. But we have a website. There's generally a podcast released there every kind of Thursday lunchtime whilst we are in season. There's a video and there's an audio version. And if you go to the TOGS Pod website, you can also access some of Ian's trader blogs, and also my Monday market update goes on there as well. So it's either togspod.com or as I said, you can use that QR code there. All right. So as I said, we're going to talk about kind of a simple setup that both of us use and have done for years, and we both love, if for different reasons. Talking about double tops and bottoms. So what's your thoughts on double tops and bottoms, Ian? Why do you love them so?
Because it's easy. They're easy. That's basically the long and the hard of it. I think it's probably for newer traders is probably the best setup that you can learn because they're easily identifiable. They're mechanical. The only challenge with double bottoms are filtering, and that's one of the things when I was getting ready for this, and I watched some other people's YouTube videos about doing double bottoms. And the problem that they have with double bottoms is they talk about them as if they're a standalone setup. It's just how do you trade this one setup, not when do you trade this one setup, because that's the most important thing. And I'll get to that later on when we're bringing up charts, a little bit more about when to do it, not as much as how to do it, because the how to do it is actually relatively simple. It's buy or sell. So it's a simple enough thing. One of the things we're going to say about it, they're kind of self-fulfilling. They're self-fulfilling for the reason that we're all trading the same. So we all know what they are. So it's like Trader 101. So that's why they tend to appear quite a lot of the time. Another reason that you tend to see them, especially in day trading, is you get the first bottom on a intraday chart. You'll get the first bottom pre-cash session, and then you'll get the second bottom at about Irish time, probably about 4 o'clock in the afternoon, because it's the cash. The people in the cash session want to get their fill, so they send price all the way back down to create a double bottom. So you often see it straddling the open. That's the thing. The reversal patterns, right? I mean, this sounds like a very obvious thing to say, but because they're reversal patterns, they actually have to reverse. They come with knowing what sort of action you should possibly you should possibly see. They tend to happen often at the tops of ranges and the bottoms of ranges. There's a reason there why they're occurring. They just don't happen for no good apparent reason. In my way of doing them, there are three different types of double bottom. So you have the first type, which is the most common one, which is the first one we look at when we get onto charts, is that price will come down almost touching the first low and then reverse from there. It'll either hit the first low, like it'll be almost exactly just at that point. And the third one is that it will pierce the previous low. It'll go through the previous low and reverse from there. And again, if you use a little bit of smartness, a little bit of confluence, you can kind of work out which one you're going to get if you're going to get one
Yeah.
before time, basically. And that's all my opening remarks, I think, because I can barely read my own handwriting. It's one of the great problems about being dyslexic is your handwriting is really bad.
Like a doctor's handwriting, have you,
Oh,
Ian?
yeah, yeah. But they do it all by email now anyway, doctors. So,
Yeah, true, true,
uh,
true, true. No, yeah, no. You make listen. You make some very good points there. It's a case of here we go. Why don't we use the technology and see if I can help? Bang. You know, a double top. I would see it classically. You know, a classical double top. The second leg. All right. The second leg. I would basically. You'll see on my charts. I kind of because I also think of it as a 1, 2, 3 pattern. Point
mm,
three should not go above point one if you are looking at a classical double top and flipping that for a double bottom. It can be an M pattern or a W pattern. Classically, that should happen. But especially on an intraday basis, that is not always the case. And sometimes, you might get basically where it does basically flash above it there because it's basically sweeping out orders before it basically takes its journey downside. I am happy to trade them, but I will trade them on a case by case basis, and a lot of that is to do with what's gone on there, whether that be a double top or a double bot. But classically, what I want to see is, basically point three should be higher than point one. And the reason I look at that is because that is in itself an indication that buying pressure is coming in. Certainly for a double bottom, that's what's happening. The reason I've put these slides together. The reason I've got kind of a rugby scrum on the top is because that's actually how I look at a double top and double bottom. It is like there's like a fight that's going on between the Bulls and the Bears, whether it be at the top of the range or the bottom of the range. And that's what's going on. And one side will, tire, one side will lose, and the other side should take control. The look we have, which is part of the importance of a confluence, is that in for like a double top, I expect to see price, form a double top after a really good move upwards. So in the kind of the rugby scrum, I kind of have a sense of, if we've come into this, I'm expecting, there's a higher probability of price moving to the downside after that battle has gone on, that double top. So I'm kind of ready and expecting. And so I'm particularly interested in the sort of all of the price action around point three, point two, and how that continues. And it's probably easier to describe once again when we look at some charts in the MO. But that's why I've got a rugby scrum, because I look at it as like looking down on the top of a rugby scrum. And as you'll see, certainly from my own examples, and I'll let Ian talk about his, is that confluence is key. All right, these are great patterns, but they're even better when you've got the confluence happening at tops and bottoms of ranges, previous days, weeks, months, years, highs and lows, or at other levels of support resistance or particular zones of supply and demand, depending on how you like to identify that, or even things like big round psychological numbers. And the reason I've got that bottom left is that if you ever forget what a double top is, well, you've got one on your left, on the palm of your left hand there. Okay, if you look at the creases in the palm of your hand, there is a beautiful double top there on most people's hands, so you can never really forget. It is quite literally a lived experience that you have there. Anything else? Anything I've missed there, Ian? Have we pretty much covered?
yeah, the only thing that just occurred to me when you were saying there is that a lot of the time I think when you get those higher or lower piercings or the previous low or high is because there's lots of different systems operating in the market. There are people who do classic trendline E type things, or they're doing Fibonacci, or they're doing whatever else they're doing, and all of those systems need a fill.
Yeah.
They all need, because it's the way that the most people come into the market, because technical analysis is really just a way of people congregating together to get an objective done. So there's lots of different systems. So what I tend to find a lot of the time is that when it goes over, and we'll see, there's an example of it. When it goes higher or lower or whatever it is, there's usually something else down there that needed to get a fill as well. And that's the way I tend to, which is also the confluence part of it. So
Yep.
that's the reason why I tend to see those happening, basically.
Yeah, brilliant. All right, great. Listen, why don't we crack on then? Let's let's move on. So here we go. These are what we've got is some of Ian's charts, and via the wonders of technology, I am now going to try and hand the control of it across to Ian. So if you see there is a if there is a cut in the editing, that's because we're trying to get a couple of old dinosaurs to work the tech. All right, but let's see if we can do this and share that across to you. Okay, so bang. So I have. I've offered you the old.
Thank you very much. That's very kind of you.
So hopefully you should have all that. If you want to just take it on, and then you can explain to the people what the story is.
Right. So anyway, you can see the two lows here. There's a low here. This is the first low. This just happened a couple of weeks ago. It's a 60-minute chart, so it's big enough. They're far enough apart from each other. That tends to be quite a good thing as well. If you get them a little bit further apart, there tends to be a little bit more reliability in them. So for me, double bottom start at because I use Fibonacci all the time for everything. So what happens is that the double bottom starts at the 88.2 fib for me. So if it happens above that, it's some sort of other. If the turn happens above that, it's some other type of setup. It's not a double bottom. So you trade it according to the whatever setup it is. So, but in this case, what we can see is that the first little bit here front ran the 88.2, so that wouldn't be a double bottom. And then the second bit touched the 88.2 line, so that makes it valid. I can start thinking about it as a double bottom, and I have to start thinking about, do I want to take that particular setup? Is there something else, which we'll see in the next chart, that's going to make me think that this is a good thing to do, to take this setup? So basically for me, between here and the bottom, it's like having a box in this little area here, and you're looking for turns inside that box. How you want to enter it is pretty much up to yourself, and where you want to put your stops. And these can be quite wide, so you might need to take 2 or 3 stabs at them sometimes to get into them. So what I will be looking at most of the time is something like a break of a 5-minute trend line with the low stochastic, close over the trend line, and then off you go. And then your stop is under the 5-minute trend line. And that gives you really quite a good risk reward. You generally want to see the best place that they will come down to is in here in the middle, basically. Starting to look like a face there. So that's the premium spot for it. Now, the first problem that people always say is, well, what if it comes down to the bottom of it? Is because I talk about it in three different types of setup, which means that area is quite wide. So what you want to do, I'm going to just close this off here and try and bring it on to the next one. No, come on. No, we're having the first technological problem.
Yeah,
yeah, can you just move it on to the next one?
Yeah.
Didn't move for me that time. Is this fib here? I'll just put on the drawing thing again.
Yeah, put it on the drawing thing to help people just make sense of what you're looking at.
So this is a fib. And this is a trend change fib. This is the same 60 minutes. That's the first bottom, and that's the second bottom. So the first leg here front runs it. It only front runs it by 1.5 points, I think. or 2 points, point and a half or 2 points. It wasn't that much anyway. So that means it's not valid. I can't take it as a double bottom, and I certainly won't take it as this. So that's why you have that second low. If I have a good idea, because this is here, that we're going to have this high is going to be a little bit higher than the first one. Or sorry, then it's going to be a little bit higher. It's going to be the first type of double bottom, which is slightly higher in the 88.2 region. Because if it goes down below the 88.2 region in this one and establishes price beneath this 618, it has broken the trend. So it has to. There's a confluence there. There are two different things. One is telling me basically what I can expect, and the other one is telling me how I can manage that trade. Actually, this setup is really funny because I was talking about this yesterday when we were doing the other podcast, and I traded this on Tuesday. Not this particular one, but the exact same type of setup, a trend change thing. And the 8 times beforehand, it had worked. And then yesterday, after I finished work, it occurred again, and it worked brilliantly. Did 60 points or whatever it is and so that's 10 occurrences that in the last few days, and 9 of them worked, and the one that I did is the only one that didn't work. That had a stop on it.
Welcome to trading. Welcome to trading.
Yeah. So that's anyway, the main thing is that using Confluence, using some other system, using something else as well to throw on top of it can help you understand that, first of all, it's going to work because this is a high probability setup, this particular setup, because it has the two things. That it's going to work. It's going to what type of setup that you're going to see. Where price is going to turn, whether it's going to be in the 88.2 to the 100, or it's going to be from the 100 beneath that. That's what it's going to do. And then you just manage that on a 5-minute chart. So yeah, it's Confluence. That's the big takeaway on that one. Can we move on to the next one? Can I do it?
Awesome. Yeah. There we go.
Yeah, maybe I have to
clear your drawings down there.
Okay.
There you go.
Right.
That should be up. You should be able to.
Okay, yeah. So anyway, the management of this is about the management of the trade once you're in it. So the easiest way that I find to manage these, if I'm just doing these as we'll take it as a standalone for the moment, you're not working with, is I take a fib from the draw thing here, from up here, from the high.
Okay, yeah, I've done the high.
And the first target is the 38.2 of the initial of the fib that's going in the opposite direction. So there's nothing for me to do until price. I've entered the trade. I'll move my stop to break even quick enough. I tend to be quite aggressive with move my stop to break even because I'd rather not get stopped. And then there's nothing else to do until it hits the 38.2. So you can see it hitting 38.2 here. Now here I have to make a decision. Am I going to hold this? Because this is the actual real target of the whole thing is the 50 of the fib in the opposite direction. So I have to make up my mind. Am I going to hold it or am I not? And again, you can go back to doing some sort of confluence thing if there's some other system, a different fib system that needs a fill higher, or you can do it in pure old price action. Sometimes they're very quick. Because what happens a lot of the time is that the price will go to resistance, and the longs have to then show up and show their dominance, and then sometimes they can be really quick and push through. Although you tend to see that in shorts much more often. And we can see the shorts are giving it a good old try here. So you would have exited really, and that would have been your trade. So you would have entered. 5-minute chart, trend line break, stop will be just down here a little bit, or wherever you choose to put your stop, because it's up to you. And And then your first target is here. This is where it's nothing to do between here and there. And then you're sitting here and you're looking at it, and then you're waiting to see if it will go through that and touch
You
the 50.
yeah, just to help people, do you want to just can you just try and draw on there
Okay.
where your entry and your stop and your target would be? I think it would probably just help. Let me
I
just
think the
why don't I
internet.
just clear down this
Can I just, yeah.
and then
Sorry, I was trying to do that myself there and it wasn't working. So your entry is going to be down here. It should be actually on the next chart, the actual entry for this one.
do you want to go on to the next chart?
Well, I'll just go through this one time. So
Yeah,
when you're here, when you're entering, which is around here someplace, you're expecting price. There's nothing for you to do except try and get your stop to break even. And that's following your own rules. I have my own rules for it. You can have your own rules for it. And then you're expecting price to go up to here. And there's no getting out of it. There's no screwing around with it or anything else. It's either get stopped or wait for this 38.2 to touch. Once it hits the 38.2, you want to see it progress through it. You can help yourself with Confluence or something else to see, because if there's something higher that needs to be fulfilled, it might go higher. There could be a trend line, for instance, or something up there, anything at all. And then just looking at price action will help you get through that whole thing. And then this is your sort of basically ultimate target, as in it's perfectly valid to leave here because this is again a little trend change. So they are this after this happens here, this is a different trade. This is not no longer a double bottom. It's actually it's a completely different trade from in my system. So that's basically it. That takes you from there to there to there. And that's quite a nice there's a day's wages in that.
yeah,
Basically. Can we
yeah,
move on to the next one?
yeah. Of course, yeah. Let me just clear these down and
Yeah. So this is the other type of double bottom, and this is actually this is actually the entry of the one that was there previously that we just looked at. So this is actually the same. This is the 100 of the one that we just looked at. So we'd have to expect, if we were trading this, we would have to expect that we were going to get the 23.6 because this, and I have to start drawing again. If we go back a couple of charts, if I don't, this front ran the 88.2, and it front ran the 50 that we saw on the other chart. So it's a front run. It's not tradable. In my system, it's not tradable because it hasn't actually touched anything. So the only way that that low could be tradable is if price goes beneath it, because it has to come down and touch something else. So this is what if we want to trade this using it as a double bottom. This is only a 5-minute chart. Um, this is where you're going to expect all this area here between there and this is a 23.6. This bit down here is 23.6. The only reason, and that creates that box. So any turn in that box is takeable as per my system. And the 23.6, and why that? Because there's another guy who runs a site called E-mini Addict, David Halsey, and that's where I learned fibs first. And my system is a deviation of his drawings. It looks completely different, but it's well worth he's well worth having a read of. Actually, I think David Halsey. So he uses 23.6 as a target.
yeah.
And I tend to use it as a turn box because it's the same thing. Because if you have something as a target, price will often turn in that target area. So that's basically it. So this is the second most common type of double bottom that I would end up trading, and it's if price establishes beneath here, down here, under the 23.6. So establish, you can, in these small setups, because this isn't that big, you can stand a wick. There's no big problem with wicks on a 5-minute chart. So what wicks the rule basically with wicks is that within the time frame that you're for me, within the time frame that you're trading, it's about price establishing. So price can either establish above this line, which it has, or if it establishes, which means that you're going to get a body close beneath the line, and that is a problem. If you get that, that for me then invalidates the whole setup, and it's on to the next thing. Even if it turns, it's something else. So the management is exactly the same. You would, as you saw in the last one, put your fib across here, and then you would be up to 38.2 and up to the 50 and beyond if you think that that's where it's going. So it's not so even though it's only a 5-minute chart, and the last one we looked at is a 60-minute chart, the rules are exactly the same. The rules only change when it's in its when the setup is the rules don't ever change, because I was say the rules would change if the setup was too small, but if the setup was too small, you can't take it because most setups have the same risk, but they don't have the reward. So you don't want to be you don't want to be in something that doesn't have a proper reward. So that's basically it. First bottom, expecting the second bottom to be lower inside the 23.6, because you have to have some sort of framework to control and manage your trade. If you don't have that kind of framework, you're just making it up. And you're entering, it's as simple as, I mean, it's not really, people overcomplicate entries. I think, sorry, I can't really draw that straight on this, but there would be, you put a trend line basically down there. That bullish bar, that's enough. I'm totally happy to take that in a bullish bar, and a bullish 5-minute thing like that in the right area, because it's the right action where you expect it in the right area. Just take the trade. It's you have as much to lose by not taking it as you do by taking it. In reality, I mean, you might get stopped once or twice, but you're also going to miss the big winners. And this and the RR on this is great. If you even got in at the top of that bar, 630 to it's 20 points basically before you hit the 50. That's fine. That's fine.
Move. Yeah, that's a nice move, isn't it? That is a nice move.
Right, get rid of those. And I think we can move on to the next one. We're running out of.
Yeah, here we go.
Oh yeah, these are simple little things. You see these quite a lot. I treat them just as double bottoms. I don't even know if they're classical double bottoms, because there is. Let's put on the draw thing again. Because there's obviously is support there of a type, and so I just treat that in exactly the same way as I treat that as a double bottom. Same setup. If you expect to see it in the same, it's about expecting to see it. You're using your whole system is about expecting, because in the morning I have to go in, and the first hour of my job every day is to make a plan about what I expect to see and where I expect price to go, because in reality, the whole day trading is one decision. Are we going up, down, or sideways? If we're going up, we're going to take pullbacks and bullish setups. If we're going sideways, we're going to pig out and do lots of trades, because there's going to be, if the range is wide enough, there's going to be a lovely range. And if we're going down, we're going to use bearish setups.
Yep.
So it's all relatively easy. And when you start seeing something like this and you expect it, and you see this green bar here, you're sort of you're in the zone basically of something nice happening for you. So that was 5. I think I'm down to my last chart. So
that's it. Just before going to that, it's interesting that, because I would see that as a test of support, not necessarily as a double bottom there, because the nature of it, to me, I would look at that as that's for me, that's the double bottom there. All right. And I might say that's a double top, but here for me, that would be that's a test of support. I wouldn't look at that as double, but
No, but
different
yeah,
different opinions. That's what's make a
yeah,
market, isn't it? That's what makes a market
yeah.
and stuff.
It's just yeah, and it's just basically means that, well, for me, what the in a way of looking at them like that, it means that I'm using the one way of managing them.
Yeah,
I don't have to reinvent something else. I don't have to think about something else. So I can use the same mechanical means of managing the trade. And that simplifies my workload. It means I'm already getting, because every time you do a trade the same way, you build up some little piece of information about that trade. And I think that that's the thing about it. So yeah, it's whatever. And the other thing too is the way I learned an awful lot of this stuff, like I've gone to, trader meetups and things like that, and they're all talking about, I don't know, fair value gaps.
mm,
What's that now? What's a fair value gap? And it was getting embarrassing for a while. Sometimes I was going out because I was going, that thing where the price does this with the other thing, and then it moves like that, which I might have seen 1,000 times, and I might have traded it 100 times, but I don't know what the bloody name of it is.
well, that's the thing, and it's the label. That's just an
That's the thing.
imbalance,
Yeah,
isn't
yeah,
it?
yeah,
It's just an imbalance. It's just each generation has a new name for the same
yeah,
for the same phenomena.
yeah.
Really, I think that's the way I look at it. But
Just a matter of interest. I wouldn't see this as a double bottom at all because I can tell by my eye that hasn't come down to the 88.2 because I would be drawing from here to there and I wouldn't have done the 88.2, so that's invalid. That wouldn't
okay,
be in the system. I wouldn't be able to take that little thing here. This one over here, on the other hand, that's going to have done the 88.2, and this one is going to do the 23.6 just inside. It'll just be inside the 23.6. It's actually be infuriatingly just inside the 23.6.
interesting.
There,
That is
there.
interesting.
Yeah, and the other thing too I wanted to just point out is that these things are prolific. There are lots of double tops, double bottoms. I mean, even if you're looking here, that's one. That's a double top. And by the way, all these things just reverse for double tops. This is a double top. Sorry, I'm really bad at drawing. This is a double top over this
Mm,
side. They're prolific. This isn't a double bottom. This is something else. I think this is probably actually a 50. I don't think that that's actually come all the way down to the 88.2, but that's fine. Happy enough with that. Um, there's one there that failed. And that's another thing you see sometimes is just after something fails, you get these big bars down. And that's just to show dominance from, and also as well, because there's nobody defending it. It has broken the key setup. So nobody's there to defend it. There's nobody like, I'm not going to buy this as a long down here after it's destroyed the double bottom. I'm just not going to do it. So the last thing I'd say about these is that although just looking here on a 5 minute chart, you could be looking at a daily and it's the same thing. It's the same set of rules. Just bring them forward. And there's loads of them on the daily charts as well. And
very
if you're
true.
they're brilliant, I
It's
think.
and that's a good thing, isn't that? That you can basically, once you have your own version of a double top, double bottom, once you've got it locked in to your own kind of cognitive recognition ability,
Yeah,
it doesn't really matter whether it's a 5 minute chart or a 4 hour or a daily chart. Those patterns will show up, in different frequency and different times and play out differently. But you just basically get very clear at being able to see them,
yeah.
across all instruments and time frames and stuff. And once you've got it there, you can look at any chart, you bang, that's it. And that's what
Mm.
you're kind of training yourself to be comfortable with, isn't it? So
Yeah. And overall, I find the 60 minute is the best because it has just about, it happens often enough
yeah,
and it's got enough of a risk reward that it makes it worthwhile. They are a little less common and they're probably a little bit better if they're multi-day, not just occurring on the same day. So that's that. I think we can move on to the next one. I've only one more slide left and I've very little to say about
slide, isn't it? So bang, sorry.
these little pinchy things or whatever they're called. I see there are traders I know that think that these are absolutely beautiful and fantastic and wonderful and great. I don't like them.
What are you talking
Oh,
about when you talk
sorry,
about a
sorry.
little pinchy thing? That doesn't really, you're not really sort of kind of helping us here, Ian.
Yeah, right. Sorry, I had put in a little yellow thing here, so I assumed that
Yeah,
everybody would automatically, eye would just go straight to the little yellow thing. Here, these little things. There are lots of traders that I know that love that little pattern. Well, not lots, one. And they are technically could be seen as double bottoms. Like, I mean, you could scoot that down to a 1 minute chart and trade it as an actual double bottom if you wanted. But I don't like it. It's not something I like. So I just thought I'd point it out, just out of the fullness of whatever. I mean, they do happen. There's one. That's one. This isn't. This is slightly different. Um, that would really. I hate this when that happens because that's a reversal pattern for me and whatever else. They people like them. I don't.
yeah,
It's just a thing. But I just thought I'd plug one in there while I was at it. To sorry, this is the I that's a reversal pattern that didn't work there. This is a different. This is not a double bottom of a different. I don't know what the name of that is. But I trade them quite often because what you do is you have this little box. You have this. It creates this little box, and then you're shorting below, or actually buying above is more common than shorting below for this because what I do is I tend to do with the shorts is so I go into the trade and I want it to pull back a little bit. So I like to buy or to short a pullback, but I like to buy a long because I find that longs tend to be more shorts tend to be scattier because people go into trades. If you're going out to buy a pair of shoes in the morning, you're going to plan your purchase.
yeah,
But if your shoes are on fire, you're going to throw them in the bin as quick as you possibly can. So it's the same thing I think with trading. It's that people plan their purchases. So they go in and they plan their purchase, and 70% of the market are long bias anyway, including myself. I really have big problems with that. One of my biggest problems is accepting that there's been a change downward in a trend. And so shorts tend to be a little bit more, I find them a little bit more jumpy at this time frame than longs. Longs tend to be this nice little thing.
interesting.
Where shorts, there's often this pullback. As you can see here, this is a short, but there's a little pullback.
Yeah,
So that often I find that there tends to be a pullback. So I like the pullback in the short more than I like the where buying a bull bar. Um, that's not lovely. That's a bit scrappy. This is a nicer bull bar here. I don't like wicks on the top of. That's a nice little scrappy reversal bar. I really quite that
yeah,
happy with that. Now I'd like that bar.
yeah, yeah. To me, that's if I think I can draw it in a that to me is that's a key reversal bar. Yeah,
Yeah.
it's a very doesn't happen very often, but it's very strong. As in, it pushed to new lows. You can see that when that kind of level pushed to a new low, but then it reverses and it closes above the high of the previous candle. And, that's telling me the bulls have properly stepped in and wrestled control of the market, and it's happened at that kind of level. And
Hmm.
as you can see, the next few bars after it just confirms that basically that's what happens. They don't happen as often as you'd like, but I always sit and take notes of them when I do. I'm very happy to trade them. They're yeah, especially
Mm.
as I said, you've got a bit of confidence there. Clearly, there's a lot of support there at that level. You can see it, and then when it does that again, bang! Yeah,
The other time as well, it's actually the right time of day as well. Because you can see this here, you have that's actually the morning session,
Mm-hmm.
which is that little thing there. So you can really break the day down into 3, 10 o'clock. This is Irish time or GMT, actually. Call it Irish time. I'd be proud of it. Um, so up to around there, 10:30, something like that, there doesn't tend to be too much going on. And then the next move tends to be the market tends to wake up here at 1:30. And then you have the first half hour of stupidness, which is often about gap filling, actually. Oh, sorry, I should have put that 230. Forgive me. Um, a lot of the initial move is about filling the gap from the previous day. Um, which is actually a super setup itself. Gap closes are horrendously reliable. And if I was starting off again, double bottoms and the gap close would be two I would focus on. And then you have four here that tends to be 430 tends to be another reversal of time, basically, or something like that. So this you can see here is four.
Yeah.
Uh, sorry, I'm trying his term. Four, that bar is at just after 4 o'clock, and that tends to be a time, basically. That's the start of the
I
time.
just reaffirm to people that Ian and we are better traders than we are artists. So just bear with us on the lack of artistry, but hopefully you get the gist of what we're trying to share with you there and stuff. Yeah, I don't know. That's good. Cool.
And
Any
that's
more? Any more for any more?
not off the top of my head, no. That's my charts completed now with everything I wanted to say about them.
Yeah. No, that's good and stuff. It's interesting that the kind of setup you don't like is part of the setup I do like as a double top and bottom. So but as I said earlier, that's what makes a market, isn't it? So yeah, cool. All right, thanks for that, Ian. I've got a few slides here from this morning, not from this morning, from this week, from a few trades on shorter time frame intraday. In these cases, like double bottoms, just because of what the market's offered me this week. So can I go on? Yeah, bang. This is a gold 30-minute chart. I said earlier, confluence is good. All right, I like a bit of confluence. 30-minute chart, and of course, gold has been in a tear. Well, it's been in a tear since we came back end of August, start of September, but this week in particular has been in a tear. I'm interested here, all right, because I early morning, basically, as Ian said, part of the thing is just identifying the kind of the bias. All right. So as I said, gold has been on a tear. The dominant trend remains bullish even after a kind of a little bit of a sort of early morning collapse. This in itself is when it comes back to this as a 50-period moving average and gets ready to bounce off it. That in itself on the 30-minute chart, which I'm kind of using for let's call it let's call it for sort of just kind of like context here, but let me just move this out of the way here and get some sorry. Yeah, I'm just using the 30-minute chart as what I use a lot of in the on the intraday. All right, just basically for context and idea. And basically, price is already coming down to this area, which I'm interested already in looking at it as a support for a kind of a move and a bounce. So I'm kind of already on this. The grey areas, the kind of the grey box is Asian session. As an intraday trader, I am generally a kind of a mean reversion trader. I kind of like to see price break out of its ranges and then reverse. And if that reverse turns out to be a double top or double bottom, then thank you, the Bishop of Durham. I'll have some of that. So yeah, that's that 30-minute chart, giving a bit of context, and then what I'm trading here. So is this is when we go down to the kind of 5-minute chart. So um, in an ideal world, it would be nice to be able to just sit on the 15-minute chart, but you don't always get that particular joy. So I have to be comfortable operating on primarily kind of 5 and 50-minute chart, but I will also operate on the 1-minute chart. All right, when I see a good pattern, I'm really very comfortable doing that. But interestingly, as Ian quite likes. Ian quite likes double tops, double bottoms. They're quite wide. I'm the opposite. I kind of like it to be kind of a very tight, very well organized. So for me, that's why I call it like what I call like a DTB 1 2 3. So this is it's a double bottom, but it's also a kind of a 1 2 3 pattern. And so naturally, normally, basically, people would be ready to sort of trade once price had kind of broken 0.2. That'd be the classical level. But for me, because I've traded a lot to them, I'm quite comfortable to be aggressive on this. So actually, I'm starting to get interested here. If the second leg Second leg, 0.3, is also a reversal pattern in itself. So in that case, there's a pin bar there. It's also a morning star there. Start to get the other side of some of the averages I use. I'm happy to be long there. All right. So I'm happy to be aggressive in that particular case. Also, as I said, it is basically popped out of the Asian range. It has fallen to 30-minute support. Okay, on 30-minute chart, it's put in a rejection candle there as well. So once again, I've got confluence. I've got 2, 3, 4 things all coming together at one time and place. So I'm happy to be aggressive and to be onto it and stuff. And then generally, yeah, I'm in. I think it's about 41.09 and stuff. My stops. Sometimes I get aggressive on the stops, but generally it stops beneath the low. The low of 0.1 or 0.3, depending upon which one's the lowest. And then I will. This is where I will kind of use fibs. I will very often use fib expansions, all right, of the between my entry and my exit and stuff, and look for particular fib expansion, normally like the 261. But actually also on a kind of an intraday basis, if I'm getting back in towards the kind of middle of the sort of the Asian range, and the sort of 50 period moving average is there, that I will run to that and take that, and I'm very happy with that and stuff. So I think in this particular case, it went about another $10 past my target, okay, where I exited. So some might say, well, you should have ridden it, but yeah, that's fine. Woulda, coulda, shoulda. I kind of tend to like to have know where my entry is, know where my exit is, know where my exit is when I'm wrong, and know where my exit is when I'm right on an intraday trade. Okay, I don't always, because my diary, my schedule, I don't always have the time to sit and nursemaid a trade all day and stuff. So I kind of I tend to basically have a target. I'm ex Air Force, I like to hit a target. That's the nature of it and stuff. So, yeah. So for me, that's the double bottom there. Okay, it's a very tight double bottom. All right. The price action, as I said, in the second leg is already telling me that there's a reversal likely to happen. And as I said, normally most people be waiting until 0.2 is broken to get into it. All right, but actually, I'm in it earlier, more aggressive because of just experience, and I'm happy. And there's the higher time frame confluence from that 30-minute chart as well. So yeah, as I said, I like my double tops and bottoms to be much tighter, much more kind of confined, because I like to as I said, it's like that scrum. All right. The scrum, is that basically I know price has kind of dropped here. So, this is the scrum going on, and I know the ball's been thrown in, and because I know which way we've entered that pattern, I know there's a higher probability of us coming out the other way. So, as soon as I get an indication that it's likely to be going in that direction, I'm happy to be on it. All right. So, yeah, pretty simple. Pretty simple. Yeah. Can you see that? Any feedback on that?
Well, the two things that I find interesting is the Asian session in itself, because I was looking a lot recently at like overnight stuff. It's like what happens when I was doing back testing on oil, on the overnight in oil, to see was there something, because an awful lot of oil trends, CL trends tend to start at that sort of 8 o'clock in the morning, European time, GMT.
Yep.
And I wanted to see. So that's just one thing that interests me out of that. Just is that you would use a market session or whatever. And so I quite happily take that, but I'd have to have an actual support line, something, or support area, support zone down there to take it. So it would be part of a fib system, and I love that. If you look at that as a sort of a downward channel, I actually really quite like those, because I tend to find those quite bullish. So hang on, I can draw on this, can't I? So just from
I think
here,
you can still draw on it. Yeah, if you want, if you can, have a
yeah,
crack.
yeah. So this sort of
Yeah.
they tend to be quite bullish a lot of the time, just as a pattern, just as how a pattern goes. So and the last thing I was going to just say is I love these bars. They're like my favorite bars.
Like
Anything green with a big wick is,
a pin bar. Yeah.
yeah, yeah,
Yeah.
is absolutely, I think,
What I would call pin bar. Some people will call them hammers, or low test bars or rejection candles. I don't really care
Yeah,
what you call it. It's understanding the psychology of what it's telling you.
yeah,
That's the important thing, isn't it?
it is. Yeah, I went out and bought the Japanese candlestick book, the yellow one.
Yeah.
That's really popular, and I never broke the spine of it, if I was honest. So, yeah, and it's just from
And yeah,
seeing.
years ago, I bought like a book and a video off Stephen. He wrote me a very nice note, and so he's probably got his secretary to basically write it. It was a handwritten note on his own
Right.
paperwork saying, good luck with this and all, blah 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 and stuff. It was, it was a little touch, but it was a nice touch, and stuff. So
Yeah,
anyway, yeah. So
yeah, yeah.
yeah. So there you go. That's that. That's that one. And you're going to find that most of them are pretty much similar. That this is but it's
Mhm.
bread and butter. That's what you want to be doing as an intraday trader. Um, yeah. So this was also from kind of Tuesday morning on. This is pound against Canadian dollar. So yeah,
Mm.
I work on the premise that as an intraday trader, 80% of the time, markets will basically where they open and where they close. Might not necessarily be that different, but actually in between it and the days, there will be some swings, and it's those swings that allow me to give me an opportunity. So, um, pound CAD. So basically, this was Tuesday morning. So we had 7 o'clock, 7 a.m. There was UK jobs numbers, and basically sterling got sold off across the board, and so yeah, that's what you see that kind of strong move down, and that in itself is a post news trend trade, all right. But as I said, price comes here we go. Price comes down to yesterday's low. Once again, it's that confluence, and then basically, I know that we've come down in a strong. I know that basically we're at yesterday's low, and then we put in this kind of. I put that 1, 2, 3, which is those kind of those. So I look at that as a basically as a double bottom there. Lots of rejection candles, lots of wicks to the bottom side, and then once again we kind of drive our way up towards it now. Because we've already had a really strong leg down, and I think if I remember right, I think we'd already kind of like bust the ATR for the day. So I'm expecting a bit of a move back anyway. But yeah, as you can see, sort of, after once you've gone into past kind of like 10:30ish, kind of UK sort of time, FX market and stuff. It's getting scrappy anyway. I just want to basically get in there. I think it was about 20 to 9, about 20 to 9 and stuff. I'm in, and then I'm kind of done by about 10 o'clock. That was a kind of done, happy. Thank you, the Bishop of Durham. And I'm done and dusted. That's it. And once again, it's just it is it's a double bottom pattern, but it's not on its own. It's after a long news driven trend, and then it's happening at the previous day's low and stuff. So it's that confluence again. Price action pattern, clear trend beforehand at a well identified and very clear support level and stuff. And as I said, I find kind of running back to the sort of if depending upon where it is, as I said, running back into the middle of the range is nice. But if not, I'll just take the run to the 50 and I'm done. It's a mean reversion trade. I'm not looking to as I said, I'm not looking to nurse mode a trade all day. I'm not looking to basically turn it into a swing trade. I basically I've always said this is like, to me, I look at this as like it's like a boxer's jab. I'm kind of, it's very opportunistic. I mean, take my punch and then withdraw and stuff, and admire my shot, and then just yeah, let the market do its thing afterwards. So any thoughts, any comments on that?
No, the only thing is that would have turned up as we were looking at earlier on. We were looking at little, what I was calling a little box, and that would look on a higher time frame because I use a 4500 tick most of the time for
Yeah.
finding setups. Um, and that would turn up as about a bit of a box. So I would have, if that was in support, because for me, price has to be. So I have trend. So I'd pick a trend for the day. So the trend will be, in this case, the trend will be down. But if it comes to major support, where you have the potential of a trend change, then it's perfectly valid for me to take a long in that area. So if it was in the right area, so it'd have to be in the right area, and then there's no problem. It's just a different way of doing it, and it has to be in accordance with my plan. So if I wake up in the morning and I see that moving downward, I would expect it to move, if it was moving that velocity, to move down to big support, and then a big, which in this case is yesterday's price, and then make its mind up, and then it's just buying it really, and hoping that it'll go back up.
Yeah,
because my charts.
In fact, when I was going to do some like pros and cons, but why don't we look at my last setup before we do that? That was dollar CAD. So this is dollar CAD from yesterday. So primarily, I will look to focus on sterling pairs. All right, and that would be my kind of main thrust. But I will also look at dollar pairs as well, and sometimes euro and Swiss franc, but primarily sterling is where it is. But yesterday there was like very little on sterling at all. But this is like the dollar CAD. This is my kind of 30-minute context chart. And once again, I've had the Asian session, and then price has moved outside of it. I do have a couple of additional rules and stuff about it, but it's just moving outside the Asian range. That's what I'm interested in. And then if we go down, so this is kind of, as I said, in an ideal world, it would be to look on 15-minute charts when they're very clear. And in this particular case, what we can see is that once again, we've broken out. We've been in an overnight downtrend over the Asian session. We had broken out of the Asian session. We'd hit yesterday's low. And then, you've got the kind of the 1, 2, 3, the sort of the double bottom. Oops, excuse my drawing. That's awful. It's not as bad as yours, but it's still not great, is it? But anyway, people can get the gist and stuff and what have you. And that in itself is an entry, especially when I'm starting to see the kind of that bullish. But I was already operating this on the 5-minute chart. So if we go down to the 5-minute chart here, as I said, we're moving lower. We've moved outside of the Asian range. We're at yesterday's low, and then basically, I get a double bottom there. And as I said, I'm always interested in the second leg. Okay, the 0.3. If the price action is very supportive in terms of it being bullish in its way, then I'm happy to be more aggressive than I would be normally. And that's just a DTB long, right? Double bottom, 1, 2, 3 pattern as well, long. Off, and in this particular case, I was running up into the 200 period moving average because on the 5-minute chart, because the 5 minutes close, and so I was pleased. I was pleased when it started to see the 20 period moving average started acting as support. And once again, this was another one that if I'd had the time, I would have gone, but it was I was having to prepare for us to do our podcast and stuff, so it wasn't a huge number of pips. It wasn't terribly exciting in terms of like 7 pips out of dollar CAD, but dollar CAD doesn't have the kind of the big ranges like pound CAD or pound Aussie or pound Kiwi and stuff and what have you. But trades there, all right, trades there. There's a confluence of it. Just see the trade, take the trade, manage the trade, exit the trade, debrief the trade, repeat the trade. That's the story of an intraday trader. That's the long and the short of it. So so there you go, ladies and gentlemen. Any thoughts, any comments on that?
So the Asian range is very significant to you. Are you looking to break out?
As an FX trader, as an FX trader, the Asian range is significant, significant to me. Okay, and you are right about oil and stuff. So I have a setup called the Fox in the Box that kind of does that looks at that. But I found it's like a reference point, and as it's a reference point, and B, as a long-term swing trader, I'm a trend trader, but as a short-term intraday trader, I tend to be a reversal and mean reversion trader. And so the Asian range is a reference point for me once it blows out, and then it gives me a year and very clear, very nice. Okay, in this case, double bottom. Well, then I can trade it back into the range, and that's me done.
Yeah,
I'm
because when
not
I was
trying to
looking at,
I'm not trying to reinvent the wheel or do anything,
no,
you know,
no,
super smart or try and be I just confluence events, two, three, four things come together one time and place. See the trade, take the trade. That that's it.
but that's a big thing I think that newer traders don't understand is that you don't have to reinvent the wheel. So you can
Yeah,
use it's because it's not that whether something like there's very few things in the market that probably have their own mechanical edge. Um,
yeah,
so if you have a good bit of filtering, like so if you're using Confluence, you have a bit of filtering, you can use anything really because you're essentially just trying to work out one of three things is up, down, or sideways, and that's basically it. I couldn't get the oil thing. I sort of about 50% of the time, the setup was kind of, I stopped doing it. I just didn't I ran out of motivation. But 50% of the time, it worked every time. That was the only thing I could say about it because I didn't know how to handle it. I couldn't work out how to, I couldn't get it at that stage. I should go back and look at I couldn't work out an edge for it, basically, that I could get a mechanical, sort of slightly mechanical edge in it in some way. That I would either add to what I already used in oil or take away or whatever. So I don't know. It's just something that I'm interested in is these people is ranges, those overnight ranges
yeah,
or Asian session ranges is because there is something in them. I just don't
yeah,
know
yeah.
what it is.
Yeah,
It's not.
you just have to study and stare at them, and
Yeah.
if you have the
Yeah.
ability to do some model learning on it, then knock yourself out. But
Mm.
generally, it's it's
Mm.
it's just simple stuff. What I would say is
Yeah.
that this week has been a very good week for those kind of double tops and bottoms. It's just been one of those weeks. It's not always the way. So I have and this is the kind of this is the thing, all right. My strategy is that I'm a mean reversion reversal trader looking to trade back into the range. Okay, that is my strategy. It's the strategy is the big picture, which is what traders get wrong. They think trading double bottom is a strategy. It's not a strategy. It is merely a tactic. It is a
Mm.
tactic that you are employing to follow through on your strategy. And so it's not the only tactic I use. I have a good few tactics, but when it shows up, is see the trade, take the trade. The the con, and the no trading setup is no trading setup is perfect. The challenge is that this sets up when it sets up, as in I can't tell you at 7:45 every morning you are going to get a double top or a double bottom in euro pairs, etc. I wish I could. I wish it was like that. It's not. It turns up when it turns up, and that's the downside. As in you need to sit and watch. You need to sit and watch it if you're going to intraday trade it. I mean, the pattern you'll see it on weekly charts, monthly charts, daily charts, 4 hourly charts. But if you're going to be an intraday trader, you have to sit and watch. You have to sit and watch it and stuff, which means that sometimes it happens before you're at your chart. Sometimes it happens after you've left your chart. You know, welcome to trading. That happens to everybody. Nobody escapes that, do they?
No, no. I mean, as I was saying, that happened to me yesterday. There was a nice 60-point move. And as I said, the nine times, sorry, that was 10 times. The one time I did that setup this week, it failed. It's the only time it failed all week. But yeah, no, I think it's just really about expecting when you're expecting something. Because if you're going to start trying buying double bottoms in downtrends, you're just knife catching, at that stage. And that's one of the whole big things of it. It has to have it's not a standalone setup. As you said, it's not something that you can just go, okay, I'm going to do this. Because if you could do that in the market, you just set up some AI thing
Yep.
and back your truck up. And I
Yeah.
guarantee you that somebody smarter and better resource than you has tried to do that and failed at it. And so it's just about when do you expect something to happen? And then it's like a Swiss Army knife. That's what setups basically are. You just whip out the setup that works in accordance with what you expect to see happening. And That's because, and that's why the first hour of your trading day or half an hour, whatever it is that you want to do, is the most important because it's the time where you're making that decision. You're sitting down and trying to decide whether the price is going to do what you expect to see. If you see if there's an obvious resistance in an uptrend, that price hasn't challenged yet. You can expect that that's where price is going to go to. If you range trade, you can expect like my whole thing. I do an awful lot of range trading. So I expect price to go from the bottom of the range to the middle of the range to the top of the range. That's it. That's my work day. So I come in the morning and I gauge where price is in comparison to where the range is and what I expect to happen. So I did a long this morning in ES. Because I expected price because it's at the top of a range, but I actually expected price to go through the range. I don't know what it's done now since then. I'm flat. I'm gone out of it. So that's basically it. There isn't really enough lot more to really say about.
No, exactly. Exactly. That's that's the nature of the way it is and stuff. So yeah. So that's just bang. I think I've just got. I don't think I've got anything more. It's just a case of yeah. There we go. There we go, ladies and gentlemen. A little bit of a bonus session, just talking about double tops and bottoms. And the interesting thing is, we're talking about double tops and bottoms, but hopefully you can see that even though we're trading the same thing, the way we do it is actually quite different. You can have an idea and you can still meld it to your own style, your own way of engaging and operating in markets, so that it becomes your version, your trading way, based upon your own experience, based upon collecting the data, based upon a bit of trial and refinement and stuff. And there you go and stuff. Are you trying to fill in your
Just wondering what I look
the
like.
albino Ayatollah's beard there, I
I
and
look
stuff.
like a good colored hair with actual might be
To
might
be
be.
fair, yeah, I've never seen your hair or beard look so coiffured. Is that the right word and stuff?
Yes,
But
it's gone a little bit out of control. I just haven't been for a haircut for a while. During COVID, it got ridiculous. I mean, I literally could put my beard up over my face and use it as a mask if I just used a bit of sellotape or an elastic band or something. So it's yeah, it's gone. I'm going away on holidays next week, at the end of next week.
oh,
So I'll be
nice
here
touch.
next Thursday, but I won't be. But the Thursday after, I'm in Norway.
Oh, of course, I remember you said. I remember you
Yeah.
said.
So I'm going to get. I don't want to subject the Norwegians to this after all they've done for the fish farming industry in Ireland. So I'll I'll get a cut next week. I promise, because I don't. It's a pain in the neck actually. It's gone to that point now. It's a pain in the neck. Um, but we'll see. Anyway, there's a nice approximation of what I would look like if I had
If you had a green beard, like a
a
little
green
leprechaun.
beard.
There you
I
go.
dyed a
All right.
green.
Well,
Yeah.
listen, ladies and gentlemen. I hope you've found that an interesting and useful little session there. Okay, if you're watching this on YouTube, as I said, I think we'll put it out on the audio. But to be honest, you want to be watching this on YouTube really to get the full benefit from it. But listen, we'd love to hear a coin put down on your in the comments. Whether you found it useful, whether it aligns with how you trade double tops and bottoms if you do, or whether you found it it's completely different. By all means, we always love hearing about how other people engage with markets. So yeah, please feel free to comment on that. And I suppose that kind of just leaves to say that yeah, I hope you have a fabulous trading week. I hope you're signed up to the TOGS Trading Podcast. If you're not, then please be so. And we'll speak to you soon, everybody. Thanks very much.
Bye bye.